What is a DSCR loan? This is the question that I'm going to be answering in today's video. First, let me introduce myself. My name is Omar Esparza. I'm a loan officer nationwide. What does that mean? That means I can help you get a loan in any part of the USA. I work with Magnolia Bank and I'm going to have all my information right down below. Now, let's get right into the video. What is a DSCR loan? A DSCR loan is a loan that instead of being based on your personal income, is going to be based on the rental income of a rental property. This means that this loan is only for investment purposes. You cannot buy a personal residence with this loan. Now, why would you use a product like this? You might say, I'll just get a conventional loan. But what a lot of people don't understand is that investors usually don't have high incomes, at least in paper, because they use things like depreciation and they use different things to lower their tax bill. Normally, a lot of real estate investors won't get approved for things like a conventional loan. So this product lets investors buy any rental property as long as it pays for itself. Here in my bank, I can help you buy 1 unit all the way up to 10 units residential, up to 8 units mixed use. Now, the down payment is going to vary. It can be as low as 20% or 25%. It's going to vary because of credit and your credit history. If you have impeccable credit history, then potentially we can get you into an investment property for 20% down. The credit score requirements for this loan is a minimum of 650. So if you have a minimum of a credit score of 650 and you want to buy an investment home, that can be a single unit or it can be up to a 10 unit, then as long as that property can be rented for more than your mortgage, then we should be able to qualify. In my opinion, you shouldn't be looking at any property that's not going to pay for itself. So the product really protects you in a way, because you will only get approved if the property can at minimum pay for itself. Usually, just from personal experience, I'm going to tell you that ideally you want to be at about a 1.25 ratio. What does that mean? That means if your mortgage is $1,000, then you need to be able to rent it out for at least $1,250. Some people are happy with having a mortgage of $1,000 and getting $1,000 in rent, but personally I need at least $1,250 to be safe, because rental properties have expenses such as toilet clog, maybe one of the doors breaks, maybe one of the window breaks, and you want to have extra money just in case, because you don't want to be paying out of pocket for these expenses. I can get you approved with a 1 DSCR ratio. However, I'm going to recommend you to be at least a 1.25. That way you're very happy with your investment property. The other thing that is going to be required to get approved is the 12 last months of your rent checks or your mortgage payment, because to get approved, the investors want to see that you have a track history of making your payments on time. So they check your last 12 months of rent check or your last 12 months of mortgage payment. If you don't have checks for paying the rent because you pay cash, what we do is that we call your landlord and we verify that you have been making your payments on time. Now let's jump into a real life example of ideally the type of person that should get one of these loans. I'm gonna show a property, I'm gonna run down the numbers just to show you, if you're thinking of getting this loan, what an example a healthy investment property looks like. So here are the numbers for property I own. The reason I'm showing you this is because this is what a healthy deal looks like. Ideally I wouldn't want to make a loan for a property that is not going to be cash flow positive. So I want to show you these numbers of what a healthy deal looks like. And if you want me to break down one of your deals like this, send me an email. I'll probably charge you like $10 to $20 per deal. I'll break down your deal and I'll let you know if I would do it or if it's a good investment. If you're new and you don't know much about numbers, then I would definitely do it, because I might save you thousands of dollars with just breaking down the numbers for you. But here's the property I own. This property I paid $176,000 for it. It's currently rented to a Section 8 tenant for $1,880 a month. And you're thinking, how has your experience been? My experience has been very good with Section 8. Property taxes are $3,800. Insurance is $1,100, and water and sewer is about $50 a month. I put these fees even though I manage it myself, because you got to do numbers just in case one day you don't want to manage it, then you give it to a management company. So I put 10% for that. Vacancy is 5%. Maintenance is 10%. The down payment was 35%. The interest is 7.5. That's what I got about a year ago. And here are the important numbers. So my monthly net is $83. You might be thinking $83 is not good enough. However, after putting all these expenses right here, if you are even cash flow positive $50, then that's a deal that I will do. Now, every year I'm netting about $1,000 in this property. So these are just very conservative numbers. Now, again, I want you to do conservative numbers because real estate is expensive. Don't put all this capital into a property that is gonna lose you money and that you're gonna need to pay out of your regular job to pay for. That makes no sense. I hope these numbers helped you, and if you're interested in getting a DSCR loan, let me know and I'm here to help you. Like always, leave a like, comment, and subscribe, and I'll catch you on the next bye.